If you're over 65, what I'm about to share in the next few minutes could affect every single dollar that lands in your bank account starting next month. 5 brutal changes are coming for seniors in this country, and most families have absolutely no idea they are coming. Some will quietly reduce the money you receive, others will reshape rules you have followed for your entire working life, and a few will hand you brand new opportunities that almost nobody is talking about. I made this video today because I refuse to let you learn these changes the hard way. In the next few minutes, you will hear exactly what is shifting, when it is shifting, why it matters to your daily life, and what smart moves you can begin making right now to protect your income, your savings, and your peace of mind. Before we dive in, I want you to picture something very simple. Picture your own monthly budget, the Social Security check that comes in, the Medicare premium that comes out, the grocery bill, the electric bill, the copay at the pharmacy, the property tax bill that shows up once or twice a year. Now imagine that one line in that budget quietly grows larger next month and another line quietly grows smaller, and you are not entirely sure why. That quiet confusion is exactly what is about to hit millions of households. The changes I am about to walk you through are not dramatic in the way a hurricane is dramatic. They are dramatic in the way a slow leak is dramatic. Day by day, dollar by dollar, they will reshape your financial life unless you understand them now. So let us begin with the first change, and it is the one that will sting the most for millions of households. The first change involves how Social Security benefits are taxed, and it is happening because the federal income thresholds used to decide how much of your benefit gets taxed are being adjusted only slightly, while the actual cost of groceries, rent, utilities, and prescription drugs continues to climb much faster than those adjustments. Let me explain it in plain language. The federal government does not tax all of your Social Security. It taxes a portion of it, and the size of that portion depends on your other income, including pensions, dividends, interest, and withdrawals from retirement accounts. For years, those thresholds have been set at specific dollar amounts, and those dollar amounts have changed only modestly over time. Now, starting next month, those thresholds move again, but they are not moving nearly as fast as the cost of living. The result is brutal. More and more retirees will find themselves pushed into higher tax brackets, even though their real day-to-day purchasing power has not improved at all. Let me give you a plain example, because an example is worth more than a paragraph of policy language. Imagine you and your spouse receive around $48,000 a year in combined Social Security and a small pension. Last year, you may have owed federal income tax on a small slice of your benefits. Under the new thresholds taking effect next month, that slice grows, sometimes by several $100s or more. That extra tax does not feel like a policy notice in the mailbox. It feels like a pay cut. And for many seniors living on a fixed income, it really is a pay cut. There is a smart response to this, and you do not need to be a financial expert to use it. If you have money sitting in a traditional IRA or a 401k, sit down with a tax professional or a retirement advisor and ask about a planned, strategic withdrawal before the end of the year. Done carefully, that withdrawal can actually lower your total lifetime tax bill because it can reduce the size of the required withdrawals you will face later in life. The key word here is planned. Never pull money out of a retirement account on a whim. Pull it out with a plan, with a number, and with a real tax projection in front of you. If you are finding this video useful, please do me one small favor before we go any further. Tap the like button right now, subscribe to this channel so you never miss another update, and drop a quick comment below telling me whether these changes apply to your situation. The comments help me understand exactly who I am talking to, and they help other seniors in the same situation find this information. The second change hits the part of your life you probably use every single day, your Medicare coverage. Medicare premiums, deductibles, and copays are being updated once again, and the changes taking effect next month include both higher out-of-pocket costs in some areas and brand new caps in others that could actually save you serious money if you understand them. Let me explain what is real here. The standard Medicare Part B premium, which most seniors pay automatically through their Social Security check, is being adjusted. For many people, that adjustment means a small increase each month. On its own, that increase may not feel huge. But when you add it to a higher Part D deductible for prescription drugs and to small copay increases on common services, the total quietly grows. Over a full year, those small increases add up to real money. The flip side of this change is genuinely good news, and I want you to hear it clearly. New rules continue to roll out a hard cap on out-of-pocket prescription drug spending for Part D participants. Starting next month, millions of seniors who hit a certain very high level of prescription costs during the calendar year will no longer be billed for additional drug expenses after a specific dollar limit is reached. That is not a small benefit. For someone whose medication costs run into the thousands of dollars every year, that cap can save them thousands more. But here's the part most people miss. The plan you picked last year might not be the cheapest plan for the year ahead. Drug formularies change every single year. Premiums change. Doctor networks change. Pharmacy networks change. The plan that worked beautifully for you 12 months ago could end up being the most expensive option for the year ahead, and you would not know it unless you compare. So the action step is simple and urgent. Log into your Medicare plan portal or call the number on the back of your card or sit down with a counselor from your state health insurance assistance program. Ask them to compare your current plan against the new options. Even a small switch could save you hundreds of dollars a year, sometimes over $1,000. If you have been meaning to look at this and kept putting it off, this is the moment to act, and it will only take a few minutes. The third change is one that you almost never see discussed on television, and I want to spend real time on it because of that exact reason. Required minimum distributions, usually shortened to RMDs, are now affecting a much larger group of seniors because of recent law changes under the Secure 2.0 Act. Before that law passed, retirees had to begin withdrawing a minimum amount from most traditional retirement accounts once they reached a specific age. That age has now moved up to 73 for most people, and it will move even higher in future years. That sounds like good news at first glance, and it can be, especially if your savings are still growing well in the markets. But here is where it gets brutal. Many older Americans who already began taking RMDs under the older rules have now received a brand new schedule from their plan administrator, and that schedule may not match their actual cash needs. Worse, the tax penalty for missing a required withdrawal or for taking the wrong amount is still extremely harsh. If you skip a required minimum distribution, the IRS can take a deep cut out of the amount you should have taken. It is not a small fine. It is a percentage penalty that can wipe out an entire year of careful financial planning in a single mistake. So the message here is very simple and very important. Open every piece of mail your retirement account sends you. Read the letters, even the boring ones. Call the number when something does not make sense. And if your financial picture has changed because of health, family responsibilities, the loss of a spouse, or simply because the markets have shifted, ask your advisor to recalculate your distribution schedule. The right withdrawal amount is not a single number for life. It changes when your life changes, and this is one of those moments when it very likely needs to change. Now here is where I want to pause and ask you to subscribe if you have not already. This channel is built for people who refuse to be blindsided by the news, and the videos I put out every single week are designed to give you the kind of plain English breakdown that nobody else is doing for you. Hit subscribe, ring the bell so you never miss a video, and share this one with one friend or family member who needs to hear it too. Every single share makes a real difference in someone's life. The fourth change is going to surprise a lot of people because it does not come from Washington at all. It is coming from your local utility company, your insurance carrier, your county tax office, and your state government. Across the country, dozens of states are rolling out new rules on energy assistance programs, property tax relief, and senior homestead exemptions that will either expand or shrink benefits starting next month. Some states are increasing income thresholds for property tax freezes, which means more seniors will qualify for a locked-in lower bill on their home, a benefit that can be worth hundreds, even thousands of dollars every single year. Other states are tightening eligibility for utility payment assistance programs because of state budget pressure. And some are quietly raising fees on services that seniors rely on, from public transportation to community centers. The cruel part of this change is that it almost never comes with a big headline. There is no press conference. There is no letter from the governor. Instead, you find out when your property tax bill arrives in the mail and the bottom number is different than you expected. Or you find out when your winter heating bill suddenly becomes harder to afford. Or you find out when an assistance program quietly stops accepting new applicants or quietly changes who qualifies. So, what should you do right now before next month arrives? Pull up the website of your county tax assessor and look for any new senior or homestead exemption program you may now qualify for. Call your local area agency on aging and ask what energy, food, prescription, and transportation programs are currently open. Visit a free benefit checking website or your state's elder services portal and run a fresh search with your current information. Millions of dollars in senior benefits go unclaimed every single year in this country, not because seniors are not eligible, but because nobody told them that the rules were updated. If this video has helped you feel more prepared and less afraid, please take a moment right now to leave a like, leave a comment with your biggest takeaway, and share this video with someone you care about who might otherwise miss this information. Let us now move to the fifth and final change, and I saved this one for last because it might be the most important of all. Several major financial institutions and brokerages are rolling out new account protections and new fraud prevention rules for seniors who hold investment or retirement accounts. After years of devastating scams targeting older Americans, with losses that often reach 5, 6, or even 7 figures for a single victim, federal regulators have finally started to require banks and brokerages to put stronger guardrails in place. Starting next month, certain large transfers from investor accounts will trigger automatic hold periods. Some firms will require additional identity verification before allowing changes to beneficiary information. Others will place automatic limits on wire transfers initiated by phone. And some will delay withdrawals from newly opened accounts for a short window to give fraud teams a chance to catch problems. These protections are not perfect, scammers are creative, and they adapt quickly. But these new walls are real, and they are arriving just in time, because scam activity targeting seniors has exploded over the past few years. So beyond simply being aware of these new protections, make sure your accounts are actually set up to use them. That means confirming that your phone number, your email, and your physical address are current with every single financial institution you work with, so the verification step actually reaches you and not a stranger. It means adding a trusted contact person to your investment and bank accounts, so the firm can flag suspicious activity to someone you love and trust. And it means sitting down with a trusted family member once a year and walking through every account you hold, every beneficiary listed, and every password that matters. That single conversation, even if it feels awkward, could prevent the single most painful financial loss of your entire life. Before we move into the final section, hit that subscribe button if you have not already, and please share this video with at least one person who needs to hear what we just covered. It costs you nothing, and it protects someone you care about. Now, I want to pull everything together for you, because this is the part that matters most and the part I most want you to remember. The 5 changes we just walked through are not 5 random news items thrown together to make a video. They are all part of one much bigger picture. Our retirement system in this country is shifting under our feet right now. Federal tax rules on Social Security are being tightened by inflation. Healthcare premiums and deductibles are growing faster than benefits. Required minimum distributions are being rewritten. State and local benefits are quietly being expanded in some places and quietly being cut in others. And the financial industry is finally building real walls around senior accounts to fight off the scammers who have been robbing our loved ones for far too long. None of this means that the future is hopeless. Quite the opposite. The more you understand what is changing, the more power you have to adjust, prepare, and protect what you have spent a lifetime building. That is exactly why I created this video, and why I keep making videos like this one week after week after week. Here's the action plan. I want you to start today, not tomorrow, not next week, today. First, pull up your most recent Social Security statement and review your estimated tax withholding with a tax professional before the end of this year. Second, log into your Medicare plan portal and compare next year's plan against your current one. A single phone call can save you hundreds. Third, contact your retirement account custodian and confirm your required minimum distribution amount, confirm the date it will be taken, and confirm whether it still fits your real life. Fourth, spend 1 quiet hour this week researching local property tax relief, utility help, food assistance, and senior benefit programs in your county and your state. Fifth, call your bank and your brokerage and ask what new fraud protections are now in place. Then make sure your contact information and your trusted contact person are current on every single account. None of these steps will take more than an hour or 2 in total. All of them could save or protect thousands of dollars every single year for the rest of your life. I want to close this video with something personal because I think you deserve to hear it. I know how overwhelming it can feel when the rules keep changing under your feet. I have sat across the table from seniors who worked hard their entire lives, played by the rules, saved every dollar they could, and still feel like the ground is shifting beneath them. You are not alone in that feeling. But you also are not powerless. The seniors who thrive through these moments are the ones who stay curious, who keep asking questions, and who refuse to let one bad piece of mail, one missed announcement, or one quiet policy change slowly drain away what they worked a lifetime to build. Please take what you learned today and act on one single thing this week. Just one. That is enough to start. Then come back, watch the next video, learn the next step, and keep going. If this channel can become a steady source of clarity and real protection for you and your family, then every minute I spend here will have been worth it. Like this video, subscribe, share it with someone who needs it, and drop a comment below with the one change you are going to act on first. I read every single one. Thank you for spending this time with me today. Stay sharp, stay informed, and I will see you in the very next video.